Welcome to the Farms.com Risk Management Educational Grain Commodity Marketing School video series. This video series is being brought to you by DeKalb Brand Seed to educate producers across Canada on grain commodity marketing. In today's video, which is our 17th video in our series, we've been doing a 4-part mini-series on basis. This is our last part on basis. It's our fourth one. So if you need to maybe look at the last 3 in order to get up to speed, please do so. And in today's video, we're going to look at the factors that affect grain basis in Canada in any given year. We'll review and define what basis is again. We'll look at the various factors that can affect basis, and finally we're going to summarize and put it all together for you so that you can do a better job of managing and controlling that basis, because it's part of your business and it should be managed accordingly. So what is basis? Basis basically, again, is the difference, if I go back to the chart here, is just the difference between the futures and the cash price. Basis is part of your marketing decision, and that is your return is always the local cash price. Understanding the relationship between that cash and futures is important when putting together a risk management strategy. Remember, futures is still your biggest risk, not basis. Corn futures can drop from $7 to $3, very quick order. We've really never seen basis, whether in Western or Western Canada or Eastern Ontario, move that wide within a very short period of time. So, what are the factors that affect basis? Well, in our last video series, we talked about that all prices are related through time and space by transportation and carrying costs. So have a look at that video if you don't quite understand what carrying cost is. All points are unique, basis related to cost. Essentially, to put it into very simple terms, your basis is just a local barometer of local market conditions. Just remember that. So, basis for grains, let's start off with basis for grains in Eastern Ontario. And by the way, this is a basis sheet that you can get daily, and I'll show you how to get that later from Farm Market News for Eastern Ontario cash crop producers. The main driver basis really is supply and demand in any given year in the local market, but differences in storage availability and transportation costs can also play a big role. In Eastern Ontario, the Canadian dollar can actually have an impact as well. We'll look at that a little bit later. In years when you have very small crops, there's a deficit and supply demand remains quite strong and you get a very narrow or small basis. The opposite is also occurring when you have a very surplus crop where that basis widens or gets worse. So let's have use an example with corn here for Eastern Ontario. This is April 20th, 2011. And you can see the basis for old crop is -80. The basis for new crop also wide. As we move to May 31st, 2011, all of a sudden that basis has narrowed considerably as well for new crop. Why? Well, it looks like demand remained quite strong in 2011. We shipped a lot of it out and now we're trying to ship it back in. We can't find the corn. The producer is sold out. Corn for old crop improved by 75 cents within a 1-month period. New crop also improved by 60 cents as well. So you can see that demand is playing a big role recently with that Ontario corn basis. Let's have a quick example with soybeans. Soybeans, you can see on August 23rd, 2010, it's quite tight for both old crop and new crop. Tighter than historical 10-year pattern average. By May 31st, it widened both for old crop and new crop. The old crop basis widened by 90 cents, new crop by 95 cents. Demand remained strong, but we had a bumper crop in 2010-11. So, how do you get some of this basis information? Well, again, you can go to the John Jordan Farm Market News daily information. You can email John Jordan. I provided you the link here, or you can go to the website at ridgetowncampus.com/agrilink. Exchange rate changes. This is a daily chart, June daily Canadian weekly futures chart. You can see how the dollar has nicely rallied since the 07-08 lows, and that has had a huge impact on basis in Ontario. The Michigan US versus Ontario Canada example below shows that when the dollar's at par versus the dollar at 150 versus the US, the difference in exchange in basis goes from very small basis to a very good basis at a plus 275. So, understanding those historical relationships on basis, the average, the highs, the lows, can determine whether a basis is good or bad. So over the last 10 years, Ontario basis has averaged between a minus 1.15 to a plus $1 per bushel over that futures contract. Ontario soybean basis minus 3 to plus 3. Soft red winter wheat basis in Ontario is averaged a minus 5 to a minus 20. That soft red winter wheat has never been a plus basis in Ontario in the last 10 years. So again, comparing that basis over time, over a 5-10 year period, can help you determine whether it's good or bad basis offer. Basis for grains in Western Ontario follows the same principles as corn and beans. Basis for canola tends to be the Saskatoon basis plus or minus. Freight, transportation, depending on whether the point is a surplus or deficit. Similarly, barley tends to be Lethbridge basis plus or minus transportation costs to and from Lethbridge. Let's go through an example with canola. You can see canola here on October 18, 2010. This is per bushel, 30 under. By May 31st, it's improved. Old crop improved by 23 cents per bushel, new crop by 40 cents. Demand remained quite strong as supplies dwindled, basis narrowed. Elevators are still looking for canola that they can't seem to find, so that basis has narrowed. You can also go to the Canadian Wheat Board. This is hard red spring wheat on, I believe it's October 19, 2010. Basis was a plus number. Still a plus number as of May 31st, 2011. Not as strong. It's narrowed by about 7 cents. Canadian wheat basis has been above zero or a plus number as markets continue to deal with continued strong demand, tight stocks, and planting delays in 2011 due to wet weather. This is a December CWRS 2004-2009 historical chart. And you can get the March, May, July from the CWB, Canadian Wheat Board website. I'll show you the links here in a second, but over the last 6 years, that basis has averaged a minus 82 per bushel, a minus $30 per metric ton to a plus $40 per metric ton, or a plus 109. Canola basis is over the last 10 years has averaged a minus 40 per metric ton or a plus 20 per metric ton. So again, when you're closer to plus 20, you need to do a basis contract. When it's minus 40, you kind of let it ride. Western Canadian basis resources, here's the links for those historical charts. And then you can also go to Viterra. Viterra, you might be a customer, you might already have a login, a username, password. If not, you can also get that login information to get to the basis information. So there's 3 ways you can manage this basis. You can do a forward contract, eliminates the price and the basis. You can do a basis contract only, let the futures ride, or a synthetic basis contract simply means you forward contract in number 1, but then you go long futures, and you may participate in the market if the market continues to move higher. So in summary, basis has some seasonals in it. When the supplies are tight, basis is better. When there's a surplus, basis is worse. Basis risk is manageable. Again, you can do it through forward contracts, basis contracts, synthetic basis contracts. Understanding that historical average is important. Minimum price contracts can all help a producer control basis. It's part of your business. Try to manage it. In our next video series, we're going to look at hedging with options. Thanks for joining us today. I hope you've learned a little bit more about basis in our past 4-part mini-series on basis. And if we can do a little bit better job on managing that basis, you too will add some more dollars to your bottom line. Until next time, thanks for watching. Have a great day.